To keep yourself updated, subscribe to Indigo Learn and click the bell icon.
PE of OE also disqualified. Sir, what is this language? Listen. Partner or employee of officer or employee also disqualified from being appointed as company auditor. What does it mean? Now, basically there are four relationships coming out of this. Partner of an officer, disqualified. Partner of an officer, disqualified. Partner, when I talk about, so maybe this officer has some business and officer has some partnership. The partner of the officer is disqualified from being appointed as the company auditor. Clear? Right. So basically officer or employee, basically we said he is employed with the company. So there is a partner of such officer, disqualified. Partner of such employee, disqualified. Disqualified means what? Disqualified from being appointed as company auditor, because company auditor requires independence. This person may not have independence. Then officer or employee, right? Employee of an officer, disqualified. Employee of an employee, disqualified. So basically there are four disqualifications coming out of this. So what was the second disqualification? Officer or employee, disqualified. Then what is the third point we spoke about? Partner or employee, PE of OE, also disqualified from being appointed as company auditors. So friends, till now we spoke about three disqualifications. Body corporate other than LLP, disqualified. Then second point, officer or employee, disqualified. Third point, partner or employee of officer or employee, disqualified. Let us now go into the next set of disqualifications. Here, let us understand something called as a gang of people and group of companies. What is this gang of people I am talking about? Listen carefully. The person who is proposed to be appointed as auditor, okay, I will call that person simply as person, okay. So the person who is proposed to be appointed as auditor, that is the first person in that gang. Then relatives of such person, and thirdly any partner of such person, So basically in this gang we have three categories of people. One, the very person who is proposed to be appointed as auditor, then such person's relative, such person's partner, all put together we are calling as a gang. Okay, keep this aside. Then come to something called as group of companies. What is this group of companies? The company into which this person is proposed to be appointed as auditor. The company into which that person is proposed to be appointed as auditor. Say, let me call that as GMR, Delhi International Airport. Okay, so just giving an example. So maybe that is the company into which this person is proposed to be appointed as auditor. Okay, now I'll just call it GMR Airport. Okay, for simplicity I'll call it GMR Airport. That GMR Airport's holding company, GMR Airport's subsidiary company, GMR Airport's fellow subsidiary company, GMR Airport's associate. Oh my God, look at the group of companies, so many things we are talking about. That company, then that company's holding company, that company's subsidiary company, that company's fellow subsidiary company. Fellow subsidiary means what? We have a common parent company, then we call them as fellow subsidiary companies. Okay, right. So for A and B, if the holding company is common, we call A and B as fellow subsidiary companies. Then if that company has an associate company. Okay, so this we are calling as a gang. Associate means what, by the way? Associate, if somebody is holding 20% or more in us but not majority stake, we call them as an associate. Okay, right. Then so basically if we are holding 20% or more in another company, that entity is our associate entity. And just imagine, I'll put an example. There is a company called I. Okay, I holds 20% or more in A. I holds 20% or more in A. I will say that A is an associate. A will say that I is an investing company. Are we clear about that? So that 20%, not majority control, but 20% or more is what we talk about as an associate. So alright, come back to this gang, come back to this group. Who are all the companies that are there in the group? The very company in which we are proposing to appoint an auditor, that company is holding company, that company is subsidiary company, that company is fellow subsidiary company, and that company is associate if any. All these we will call as group of companies. Alright, quickly, we know the gang, we know the group. Who are the people who are there in the gang? The person who is proposed to be appointed as auditor, then that person's relative, that person's partner. These are the people who are there in the gang. We know who are there in the group. Okay. This gang and group will remain, or you should remember properly, because for quite a few points we are going to discuss these. Okay, right. Listen carefully to this point. Now, if anybody in this gang has any shares in the group, if anybody in this gang has any share in the group, first I am saying any share in the group, even one share, for a moment it will be considered, okay. If anybody in the gang has any share in the group, then who will be disqualified? The person who is proposed to be appointed as auditor will be disqualified from being appointed as auditor of the company. Say in our example it might be GMR Airport. So this person who is going to be appointed as auditor will be disqualified from being appointed as auditor of GMR Airport. Are you clear about that? So this is the first point under these disqualifications. I am not talking about the first 3 points of disqualification, they are over. Body corporate, OE, PE of OE, those 3 are over. Now this is the 4th point in that sense. So if they hold any share, any security in the group of companies, then this person will be disqualified from being appointed as auditor of the company. Now, there is an exception to this rule. The rule is, if this gang has any share in the group, then disqualified. But the exception is, if a relative as defined under Companies Act, okay. So, if a relative of this person holds shares of any company, I mean all companies put together in this group, shares in the group of a face value up to 1 lakh, then there is no disqualification. Come on, let me repeat whatever I just now said. Imagine we have a relative, brother, okay. Our brother, so I want to be appointed as auditor, and my brother has shares in that group for a face value of 80,000 rupees. Face value, I am not talking about market price, I am talking about face value. Face value of those shares, some 80,000 rupees. Then, will I be disqualified? No, I will not be disqualified. So, this is the exception. So, in the rule, what did we learn? If anybody in the gang has any share in the group, then disqualified. That is what we first said. Now, what is the exception to the rule? If a relative has shares or securities or interest of face value up to 1 lakh, then there is no disqualification. So, this is a little relaxation provided. Okay. Now, what if suddenly whatever our relatives do, why will they tell us? They may do. So, even if that person is my brother or sister, they may purchase shares without telling me, possible. So, if that person increases the face value, means that person purchases more shares in that company or in the group, and the face value exceeded 1 lakh, face value exceeded 1 lakh, or maybe that company gave some bonus shares and suddenly it exceeded 1 lakh. That is also possible. So, in such a case, what should be done? The regulation says, if that limit what the relative is holding exceeds 1 lakh, then within 60 days, relative should bring it down to below or up to 1 lakh. If that doesn't happen, then what is the consequence? I will talk about that when I come to something called as casual vacancy. But right now what I am saying is, the disqualification and qualification criteria we will check when somebody is being appointed as auditor, not after a person is appointed as auditor. So at the time of appointing a person as auditor, we are checking for this criteria and saying, if anybody in the gang holds any shares in the group, disqualified, that is the rule. Exception to that rule is, if relatives hold up to 1 lakh face value shares or securities or interest in the group, then that is permitted. But if that limit exceeds 1 lakh, within 60 days, that should be brought down to something which is up to 1 lakh. Now, on the day of appointment, what if I find that the relative has 1,20,000 worth of shares, face value shares in the group company. Then what do we do? Then this person who is proposed to be appointed as auditor will be disqualified from being appointed as auditor of the group. Are we clear about that?